Coming at you live from America's podcast studio, Eric the Turf Teacher Jones. The landscape contractor and green industry platform for success. This is the Podscape, brought to you by LMN Software.
And welcome everyone to the Podscape. You got the old turf teacher here. We're going to be talking about risk management today, or managing risk. And basically that's talking about having insurance. That's covering yourself. That's making sure you are protected from all the things that can go wrong in the green industry or the construction industry. In today's episode, we're going to listen back to some of the webinars that I done for North Carolina licensed general contractors, a great group of guys that I met with just about every single Thursday night from August all the way through November, consulting with them and discussing matters that affect them in the construction industry. So take a listen to it, because this all relates to the green industry. We all need to be licensed. We all need to be insured, and we need to protect ourselves, and we call that risk management. Before we get started today, I want to give a big shout out to LMN Software, because none of this would be possible without them. I've personally been using their software in my own company, and so far it's been a complete game changer for my business. LMN is the most comprehensive landscape business management software in the industry. From budgeting, estimating, CRM, time tracking, and so much more, it's a simple do-it tool for your landscape business and provides a platform to scale your company to the next level. And the best part about LMN is they have a free version, which you can begin using today if you choose to. Just visit golmn.com/free to learn more and start taking advantage of the software that's helped me grow my business into a successful, sustainable, and profitable company. That's golmn.com/free. golmn.com/free.
Eric the Turf Teacher Jones. Oh, yeah! Teaching you life lessons, business strategies, and leadership.
Let's grow together.
What do you think about risk is? What kind of risk do we take as builders?
Losing money.
Losing money. Exactly right. Exactly right. That's the scariest thing about it, ain't it, man? Whew. Lord of mercy. There's times you'll rear end puckers up sometime. But it's almost worth the risk. It really is. It really is. I guess because we enjoy it to begin with. But other than getting paid, what are some other risks that we might face as builders?
Accidents.
Big time. Employees getting hurt, subcontractors getting hurt, the subcontractors' workers' compensation lapsing. They're not covered when they get hurt on your property. You yourself getting hurt. Do you guys cover yourselves on workers' comp, or do you exempt yourself?
Exempt.
Yep. Trying to keep that payroll down, so we elect not to cover ourselves. And so that can actually be a troublesome thing, as we saw firsthand, didn't we, this weekend, Brent?
Oh, yeah. Can you hear me?
Yeah, I can hear you.
Okay.
Brent's my brother, and our dad this weekend was helping him. Actually lost his left thumb. They were building a garage, and so he's actually got surgery tomorrow. They're going to try to fix what they can fix and do what it is, but it peeled pretty bad. And Brent was there with him when it happened. Poor guy never screamed out in pain or anything, just kind of shook it off. But
said a few curse words.
Do what?
Said a few curse words.
Yeah.
Just because his day was over.
He was mad because the day was over. He couldn't finish working. But 72 years old, still working every single day. And that's, I think, what's kept him alive. So, but he's very lucky, because he needs to watch himself, and hopefully this is going to make him slow down a little bit and understand that there's people there that can do the job. He doesn't have to do every single thing himself. But, we run into this stuff all the time. And I know a lot of you guys, you guys are the builders. We're also landscape contractors too. and I know James is, and I know Mr. Honeycutt, being an HVAC contractor, and Tony, a roofer. Are you guys actually working for the larger builders? Are y'all working not necessarily for track builders, but are you working for any commercial GCs with your other type of business that you run?
We're just all subcontract.
Do what?
We're just all subcontract.
Who does that? Who's speaking? I'm sorry, I can't see the.
This is Lamar. We're just all subcontract.
Okay, with
for other GCs.
Are you doing them for like home builders, or are you doing them for like commercial?
Just all commercial.
All commercial, all commercial. So you're probably seeing some of the stuff that we see on the landscape end with the payment applications and the bid bonds and everything like that. Are they requiring you to do that?
Yeah, most time we work under their bonds. We're still bonded in in Mecklenburg County, but we still work under the bond for the general contractors for the commercial building.
Got you. And do y'all have to be bonded with your HVAC license in the state of North Carolina, or
Mecklenburg County requires you to be bonded? Yeah.
Okay. Well, cool. Well, let's go ahead and look at our learning objectives for this course. And like I said, when it gets about 8:50, we'll take a 10-minute break and then jump back in at 9 o'clock on the hour. All right. So our objectives. We're going to talk about the benefits of having a risk management plan. And a lot of insurance companies will actually help you put together a type of plan to reduce your risk and to actually reduce your premiums. You just gotta work with them. Insurance, we're going to talk a little bit about that. The property insurance, liability insurance, business owners policies, or BOPs as they are called. Automobile insurance, and that gets me because I see a lot of people on their business cards that says, hey, we're licensed and insured. And then you want to see a copy of their license, and they hand you a copy of their driver's license. They hand you a copy of their auto insurance. You mean I got to have workers' comp and general liability? What are you talking about? But you see a lot of people doing that, or they think their business license is actually their trades license that they need. But burglary and theft insurance, that for your shop, your home, or whatever. But even like builder's risk, we're going to have on some of the houses. I'm sure, have any of you guys had materials stolen off a job site before?
Yep. The other day.
Now, one of the last custom homes I built, they delivered the stainless steel appliances, and I swear it was my painters, because I had some crooked painters at one time, but they were the only ones that knew that those were there, and the house was locked. Delivered it late afternoon. Go back the next morning, boom, gone from the house. Did I turn it on builder's risk? No, we went ahead and ate it. We didn't want premiums going up. But coverage gaps and overlaps, that's going to happen. A lot of guys are going to miss their workers' compensation payments. They're busy. They're not paying attention. And if you're like me and you use Farm Bureau, what's the one thing you get from Farm Bureau in the mail every day? Something.
Damn letter.
A letter or something. They waste a bunch of trees, don't they?
Yeah, so you just throw it away and overlook it.
And I've tell them all the time, I'm like, guys, why can't you have a website that we can log in and see everything and just make the payments right then and there? But
I draft it out.
Do what?
I draft mine out.
You have them drafted?
Yeah, automatic every time. The only thing I pay out is my workers' comp renewal every year.
Yeah.
When they have an audit, that's it. Everything else is
auto drafted.
Yes, every bit. I don't care about writing a check. I don't want to miss that.
No. I
don't
never
want to miss that.
And using my agent, he'll call me and say, hey, man, it's due today. And I'm like, what? Okay. Just seems like, it was, due a few days ago. But anyway, those premiums do come around pretty fast. But employment-related insurance. There is some crazy stuff going on with employees. We may not see it much on the construction side or the subcontracting side, but employees, they're suing their employers all the time. based on hurt feelings and everything else. You won't believe some of the workers' comp claims that are happening because someone gets their feelings hurt or they feel overworked and stressed, and judges are actually awarding claims to some of these employees. Everybody is, I don't know, they're, got their panties in a wad, and they're just, I don't know, demasculinized or whatever. I don't know what it is, but it's happening. We're going to talk about insurance coverage for our subcontractors. We're going to talk about a bond. What is the bond language, the types of bonds that we can have, what it takes to qualify for a bond. It's pretty simple to get our landscape contractors bond. Is anybody here is anybody here using a bond for their license limitation, or are you just using cash in the bank?
I've just got cash.
Yes. Has anybody ever priced using a bond?
Yeah, they rape your ass. We looked into it. And a lot of the insurance companies we talked to, it was like they hadn't ever heard of it, or they don't even write something, for the $2 million or whatnot for the unlimited.
Yeah. Yeah, it's even hard to get it for the limited. Nobody, like you said, nobody wants to write it. Everybody kind of like pushes you off to the side. I call the company that we got our landscape bond with, and he's like, dude, you don't even want to pay that premium. I think the cheapest we had found was around $13,000 or $14,000 a year for the limited, but you just got to pay to have that bond to get your license. So like I said, hell of a lot easier to have cash on hand. But we'll talk about bond claims. We'll talk about laws governing the bonding of federal construction projects. Anybody here work on federal jobs or do anything, for the military? I know a lot of guys, especially around Fort Bragg area, do a lot of construction, maintenance type work there because the military is always doing stuff. And then laws governing the bonding of North Carolina state public construction projects. So they do require a little bit more, and they're looking for the minority-based businesses, and which is a-okay. I mean, not the type of kind of work that I'd like to do anyway. But then we're going to jump into interviewing and hiring employees, which is a difficult thing to do right now. There's a ton of questions you cannot ask people when you're hiring them. Anybody know some of those off the top of their head?
Whether they're pregnant.
Gay. Huh?
If they're gay.
Yeah. You can't ask anything about orientation. You can't even ask if they're married. You can't ask someone if they're married, which, most people are going to be wearing a wedding band of something, some sort. So it's kind of obvious, but you can't ask that question. You can't ask if they have children. So it's getting to the non-personal stuff. And, that's kind of sad because I like knowing our employees on a personal level. You feel like you get to know them and you kind of understand what's going on, the home life. It's just easier to work with them, but we can't do that. There's new hire reporting that we have to do. There's issues for hiring minors for landscape or construction work. We can't do it. Hell, my parents probably broke the law when I was growing up because they worked us like dogs.
James is in trouble.
Do what?
No, I was talking about James is in trouble now.
Oh, so you got kids, James?
Oh, yeah, I got kids working.
Huh?
Yeah, I got kids working and Tony's got illegals. Damn, what's the difference?
Now, James, are they your youngins or are they somebody else's youngins?
Yeah, well, I don't got any youngins that I know of.
Yes. So what are you working, 13, 14-year-olds?
Yeah.
Lord have mercy.
Hey.
Yeah.
Whatever.
I guess you're right. So you get caught, ain't it? Well, I guess there are some.
How you gonna get caught? I pay them cash.
Yeah. One of them gets hurt. One of them gets mad.
They spread pine straw. I said they spread pine straw and mulch. You get hurt with a damn wheelbarrow and a shovel and go to the house.
Hey, dude. They could fake it. They can fake this, man.
He's got some big machines that can dig deep holes.
That's the grown-ups run. The kids don't get on that shit.
That's James always running it.
No.
James is usually riding around in his truck on Snapchat.
All right, that's enough. Let's move to the next thing so we can get done.
Oh, dude, you got to hear me for 2 hours, man. Oh, so I got to record it and send it to the licensing board. That way they can make sure we did our thing, man. Oh,
We'll go back and take that bit out.
Oh, there's key employment laws that we do gotta, abide by. There's the Fair Labor Standards Act, the Immigration and Nationality Act, the Americans with Disabilities Act, and some other labor laws that we'll look at. But then North Carolina wage and hour laws, the required postings that we have to have in our office, an employee handbook and policies. How many of you guys take the time and actually have an employee handbook?
We got one.
You got one?
Yep.
Yeah, Tony, you got what you got? You say you had 50 plus employees, or how many you got?
No, like almost 30, 29.
29. Okay.
We had 31 last week. Must have been a bad week or a good week. I let my brother go and my father go today. I don't keep track of them. That's the office's job. I just know how many we pay, roughly how many we pay.
Oh man, but that employee handbook, man, that is something important to have, and you gotta. It's a work in progress. It's got to be updated often. It's got to be changed because the industry changes. The rules, the regs that you have, and you have one employee that keeps doing something wrong. It's like I said, it's a work in progress. Benefits. Any of you guys provide benefits? Insurance, retirement, anything like that for you guys, or nope?
We have 401k profit sharing.
Okay. Then do you do any type of health insurance for them?
No.
What about discipline employees? You can't do it like they did in the old days. You can't use foul language. You can't get mad. You can't get upset. You have to fire or terminate employees in a very diplomatic way because they're being awarded workers' comp claims no matter what, just on the way you fire them. If it hurts their feelings again, trust me.
Unemployment, you mean?
Do what?
You mean unemployment, right? Not workers' comp.
No, they are filing for workers' comp.
Oh, when you fire.
When judges are awarding workers' comp claims because they were terminated in a disrespectful manner. You can't just walk up to them and say, "Get the heck out of here! You're fired! Get off my job site!" Blah blah blah, and start using bad terms. No, you've got to do it very respectfully in a quiet manner, not around any other employees. You've got to give them time to get their things collect. It's a lot of hogwash, but everybody is super sensitive these days, and you got to protect yourself. You really do. But I don't know, you guys. I'm starting to know y'all's personalities a little bit more. Y'all seem very calm and collective. But what happens if you show up at the office and you're in a bad mood before you go to the job sites, or even, if you're having your employees meet you at the job site and they see that you're in a bad mood, what's that typically do for them?
Mine won't show up.
Is what, Donnie?
Mine just won't show up.
But if they do show up and they see that you're in a bad mood or that you're upset,
they usually know before I get there.
They usually know before they get there.
Before I get there, yeah.
But if they see that if you're upset, they're probably going to be a little upset and a little timid and a little shy. If they see you happy and upbeat and positive, it's going to kick them into that positive mode. And actually do a little bit better for you. So it's kind of hard. If you gotta get ticked off or mad or whatever, the best thing to do is hold it and go get in the truck. All right. So let's jump into the risk management benefits. Unmanaged risk can harm your business. It's going to give you a financial loss, lower profit margins, and unnecessary liabilities. This can involve assessing all areas of your business. So you got to look at it from the ground up. What is it that you're doing? But good risk management will provide several benefits that affect your reputation and the bottom line. It can lower your business and liability insurance premiums, can reduce chances of being sued, and it can improve your chances of a prevailing lawsuit. Like if you have this document in place, hey, this is how we are preventing accidents. We do the training. We document all of our tailgate, morning safety briefs with your guys. When you document that stuff, that helps pull down your premiums. And then if you get in a lawsuit and the judge sees that you're taking every necessary step to help your employees not get hurt, they're going to look at you a little more legitimate, and they're not going to automatically side with that employee. They may find some fault in what the employee's doing. Yeah, especially because they're going to go take a drug test right away. But you got to have this plan in place, and a lot of the insurance companies will help you write that. But insurance, it is a way to supplement your risk management program. Protects your business against unseen events such as accidents or theft. So how many of you guys have actually had an employee get really, really hurt, like severely hurt, like in the hospital several days, weeks, or whatever, and out, months with workers' comp? Anybody?
I have.
What'd you say, Donnie?
I have, yeah.
Yeah, what happened?
He fell off the roof.
Fell off the roof.
He wasn't supposed to be out there, but he was. And he wasn't tied off. He had a rope out there, but he was supposed to be inside doing something, but he jumped out there to help for a minute and didn't hook up and got on some loose paper. That was it. He fell about 26 feet. That don't sound far till you do it.
Oh, yeah, exactly. Now he survived, didn't he?
Yeah. Mm-hmm.
All right. But how long was he out? Or did he come back?
Hospital 90 days.
90 days in the hospital.
Mm-hmm. Broke his ankles, jammed his hip up, and broke his wrist.
And workers' comp covered it, right?
Yeah, they fought like hell, but they covered it. They couldn't find nothing wrong. They sent their inspectors out and all and couldn't find nothing wrong, so they covered it.
What about not being tied off?
Well, he should have been. You can't watch him every second. His method was there. He had the stuff in place.
Oh, okay. Gotcha.
But they canceled me.
They
They canceled me when it was done.
Yeah. And were you able to find it somewhere else, or did you have to wait a period?
It was about 2 years before I could get it hooked back up,
And to me, that is the most ridiculous stuff. You're paying your premiums. You're paying your due diligence. You're paying them every 6 months or every year, however you write it, and you have a claim and they drop you. It's the biggest bull crap.
We quit framing now. We don't do it anymore. We sub it out. But back then we were framing a lot.
Yeah. Good friend of ours that we use framing from time to time. He had 150 employees at one time back in the heyday, back in 08, 09. And all they did was frame. And he told me, he said, Eric, I never turned anything in on workers' comp. I have it. I pay the premiums. But he said, I just keep a running tab at the hospital emergency room.
Mm-hmm.
Just simple things.
$300,000.
Do what?
That bill was over $300,000.
Yeah.
Paid it up.
So.
I thought it was cheap though to be in there that long.
Yeah. 90 days.
Mm-hmm.
That's $3,000 a day.
Yeah.
No.
Quite that much.
Yeah, about 3. Yeah.
Is it 90 and 3? Yeah. A little over 3.
Yeah. But guys, without what if we didn't have this insurance, we could lose your business in a lawsuit. And the less coverage your business has, the more risk you assume. Now, I have a story, and this was about a landscape guy. I know it's kind of not construction related, but he's a tradesman. And the poor fella, he had a full-time job during the week, and he was at a job site on a Saturday cutting lawns at a stoplight, corner lot. His mower picked up a rock and was slung across went through the passenger glass window and hit a little girl upside the head. Pretty big size rock. He had no general liability, no insurance, nothing. He was operating as a sole proprietor. Guess what happened to him?
Lost everything he owned.
He lost everything he owned, including his family, his wife. She left him. They took his house. They took his cars, everything to pay that hospital bill. And the point, and you know, I feel sorry for him. And I also feel sorry for the little girl. I mean, she ended up being a vegetable pretty much the rest of her life. And I mean, she needed to be taken care of. I mean, it was his fault, even though it was an accident, but still a simple policy like that. Yeah, they would have probably canceled him, but he would have been covered. He wouldn't have lost his home. His wife probably wouldn't have left him. Serious situations. But insurance is a protective measure in which coverage is obtained for a specific risk or a set of risks through a contract. So basically our insurance premium is a contract that we have with the underwriters. An insurance policy outlines the specifics of the contract between your business and the insurance company. The law may require you to carry certain levels of coverage: workers' comp, unemployment, and vehicle insurance. And let me tell you something. If you don't pay that unemployment insurance, who's going to be knocking on the door real quick? It's going to be the IRS. And trust me, they show up in black Suburbans, suits, and a sidearm. How
do you know that?
Because it's happened. It happened. When I was married to the girl's mom, we hadn't got to the house yet, and she says, "I think you need to hurry up and get here." I'm like, "Wow, what's going on?" She said, "There's people from the IRS here." I'm like, what the heck? And what had happened, man? I downloaded the wrong tax tables. I had gotten off by just a little bit, but it was over a period of like 3 months. I owed them like $2,000. I mean, it was total mistake. And they showed up. They had a badge, ID badge. There was firearms. There was 3 of them. And it was almost like Men in Black, you know, the movie, the way they were dressed. But it was a large, heavy-set woman, and she was kind of the supervisor. And she's like, "We need that $2,000 today. Here's the records, blah, blah, blah." Like, okay, let's figure this out. So, but they will show up when you get off on unemployment insurance. So property insurance typically covers your business and your personal property when damage, theft, or loss occurs. Covers a variety of risks: fire, theft, vandalism, and acts of God. Now, with all the rioting going on right now, I'm wondering if these insurance companies are holding up their bargain for some of these businesses. I don't think they are they? There's a lot of businesses, when that happens to them, they're just gone. They're shut down. We won't see them open up.
Eric the Turf Teacher Jones. Oh, yeah! Teaching you life lessons, business strategies, and leadership.
Let's grow together.
If you're needing irrigation, landscape, or pesticide credits, check out my website at turfteacher.com. Every Tuesday evening at 7 p.m., we host Turf Talk Tuesday for pesticide credits and have online courses for both irrigation and landscape contractors. There are also several opportunities to get your credits at one of our seminars that we do throughout the southeastern United States, and information on our Christmas lighting course. Check it out again at turfteacher.com. The types of property that you want to cover: your buildings, your furniture, your equipment, all the stuff that we work with every day, your supplies, if you're keeping any supplies at your shop, your inventory, the machinery, computers. What about intellectual property? What would be intellectual property for us as builders? What about all the stuff we got on our computer? Stuff, our records, our bookkeeping. What about our plans? What about all these? Because we pay pretty good money for house plans, right? Or pay the architect to design the houses, and you've got copies of them. That stuff you don't want to get going. You don't want to have to repurchase that stuff that's yours forever. Intangible property, leased equipment. if we're doing any leasing? Some people do, some people don't. What's y'all's theories on that? Is that a good thing or a bad thing? Leasing your trucks or your equipment? Or do y'all just write checks? All y'all big time boys, ain't you? Donnie, what? You just go write a check, don't you?
I bought all my stuff.
You bought it all.
Mm-hmm.
Something's worked for me is I look over like the 3 months thing. Look at each month for 3 months, and if you've used it enough to pay for a monthly payment in those 3 months, then you need to go buy it.
Yeah. Oh yeah.
Yeah. I lease some too, but it's just stuff I don't use much, you know.
Yeah.
I own most of my big stuff.
Yeah. Well, property insurance, all risk builders insurance, named peril builders risk, inland marine, equipment theft. I always remember my dad talking about inland marine, as growing up and stuff, talking about that with Farm Bureau. Equipment floater policies, transportation floater, motor truck cargo. So if you're moving your equipment or moving your supplies, you may have to have a floater to cover all that. What if your truck was in a wreck? May or may not have been your fault. What if the person that hit you didn't have insurance? Who's going to take care of that? You're going to have these type floaters for your business. Liability insurance, commercial general liability. So for bodily injury, damage, or loss to property, personal injury, or even advertising injury. And even if your workers' comp, exceeds its limitations or whatever, your liability will pick up right there. It'll continue to cover it because it depends on if you've got, 500,000, million, 2 million, or whatever. I know we have a $2 million policy. Some of the commercial builders required that. So we have that. There's umbrella liability insurance. This is a supplement to the commercial liability. Directors and officers liability insurance. This protects the higher ups in your company, you yourself. Most people probably don't have that. Then there's contractual liability insurance, contractors protective public and property damage liability insurance, construction wrap up. So probably the only two that we're probably going to do being residential home builders is going to be the GL and the workers' comp. A lot of this other stuff pertains more or less for the larger commercial builders and what they would require for their subcontractors. But business owner policies, or BOPs, they bundle property and liability coverage together. This type of coverage can eliminate gaps and overlaps between separate property and liability policies. Like I said, how many letters a day can we get from Farm Bureau? Small and mid-sized companies usually qualify for this type of policy. Automobile insurance, if you have a company vehicle or a fleet of vehicles, auto insurance provides coverage for liability and physical damage associated with vehicles owned by your company. All states require it, so you got to have some level of it. Now, the other thing that you've got to worry about is if your employees are using their vehicles operating or doing something for your business. Let's say you're at the job site and you send somebody, they take their personal truck to go pick up some supplies. They have a major car wreck and they actually hurt someone or they kill someone by accident. Who do you think's responsible? It can come back to you. It can come back to you. If the lawyers find out that they were going to pick up materials or do something in the name of your business, you can get in trouble for it. They can hold you liable for it. It's not fair, is it? But it happens. It happens. I had to, James, you didn't come to the Raleigh class I did last January, did you?
No, I wait to the last minute.
Oh, okay. We had a guy that was in the class there, he called them his right hand and left hand guys. He's like, these guys did everything for me. He said, I could trust both of them. And it happened in November. It was around the holiday, Thanksgiving. and they were involved in a motor crash accident. It killed one instantly on the site, and one at that time in January was still in Chapel Hill intensive care. 3 months later, still in intensive care from the car wreck. He said the lawyers, and he said it was not my guy's fault, but he said the lawyers were, swarming the place, going through books, audits, everything. What they were trying to do was find out somehow or another that he was not operating as a corporation. They were trying to pierce that corporate veil so they could actually take some money to help cover the expenses in the crash. It wasn't their fault. But he said, dude, I am tired of, and he broke down in tears. And he said, all of my ducks are in a row. He said, it happened to two of the, my best employees. And he said, we lost one. And he said, the poor guy's still fighting for his life in intensive care. And he says, I'm having to deal with lawyers and everything else, trying to prevent them from taking what we've built up. And it wasn't their fault. That's what gets me. Burglary and theft insurance. It covers loss or damage by burglary, theft, larceny, robbery, forgery, fraud, and vandalism. And so I think a lot of this probably needs to be bumped up with everything going on. It does not cover your employee acts. So if your employees are the ones stealing from you or frauding you or even breaking in at night, it's not going to cover you. A fidelity bond or an employee theft insurance is used to cover criminal acts or burglary and theft by employees. On top of all this, you still got to deal with people working for you, wanting to steal from you. Key man life. What do y'all think this is?
It's my retirement plan.
For your wife, maybe.
No, for me.
How's that? Explain that.
The way they've wrote it up is a life insurance policy for me as a key man insurance, which makes it 100% tax deductible, saying I'm the key man for the business.
Yeah. Yep.
Which has a minimum, like where it can make interest is at 6%, where when you pull a loan, you only have to pay 4%. We pay $40,000 a year. It's $10,000 a quarter. And when I get 50, I get to pull back $200,000 a year. When you pull a loan against your life insurance policy, it's tax free. So I'll get $200,000 a year. My insurance is making a minimum of 6%, and my loan's 4%, so I'm still making 2% to the good as long as I live.
Okay.
So that's how this one worked.
Now, what happens if you were unfortunately, pass away tomorrow? How would that work?
Whoever a beneficiary gets $2 million.
Yeah. Yeah, and it also helps. Anybody in here have a partner, or is it pretty much you guys running the show, probably with your spouse or whatever? But does anybody have a partner? No. We had an instance where a good friend of ours, they run a veterinarian clinic, and it was two docs. One doc was a large animal specialist. The other, took care of the cats and the dogs or whatever. And our good friend was the large vet guy. He'd come out and take care of the cows and stuff and do that for us. And we'd take the dogs up there, and his partner would see it. Well, his partner died. And they had this key man insurance, this life insurance in place. And what it was, it went ahead and bought out the partner who had passed away, his wife. Because what happens in a partnership if one of the partner dies? It dies. The partnership dies, and they have to sell all the assets and everything, pay off all the debts, and start over basically again. Well, they had the policy set in place where if either one of them had passed away, it would write enough money to buy out the other spouse's, their fair share. And so he was able to keep the building, he was able to keep the business and keep trucking along and not have to worry about paying his partner's spouse, the rest of his life or whatever. They had that policy wrote for that. So it's a good thing to have. And James, it sounds like you got a good thing going there. But it's beneficial if your company depends on the Pacific's individuals like yourself. It is available as life insurance, disability insurance, or even both. Coverage gaps and overlaps. It is important to understand that the coverage of each of your policy provides. Be aware of gaps and overlaps that may exist between the policies, and then the differences in coverage that can cause difficulties in claim settlement. To minimize conflicts, you may want one insurer for all policies. Guys, that's the main reason I am 100% with Farm Bureau. They are a little more expensive, I think, but you know what? It's good to actually be able to pick up the phone and they know who you are. They know your situation, they know your policies, and I feel like they've got your back. And to me, I think that's worth it. If you have overlapping coverage, make sure that each policy has fairly equal reimbursement levels, and then carefully evaluate your risk management program and supplement it with the appropriate insurance coverage. Employment-related insurance, we got the workers' comp, provides coverage if they get hurt. If you're a sole proprietorship, partnership, or LLC, you are required by law to carry workers' comp coverage if you have 3 or more employees. Now, as builders, we probably got to have that anyway, because are your homeowners requiring that you have that? Does anybody have less than 3 employees?
I got less than 3.
But you're carrying workers' comp, right? Is it considered a ghost policy, or are you actually covering your employees?
I think they're covered. I've had ghost policy for a while, but I think they're covered and I'm not.
Yeah. And that's the way most owners will set it up. They won't cover.
I'm one of the employees, so I guess you'd say I got 3 that's, so I'd be the 4th one.
You'd be, yeah. Okay.
You know?
So then if you've got 3 or more employees, then you're required.
Mm-hmm. Well, one of them works in the office, but she counts.
Yeah, exactly. Yeah, and her rate's a little bit different, probably. It should be cheaper. James, you were talking about that last week or something. Don't you keep lawn care guys separate from the landscape guys?
Yeah, you got to.
Yeah, because it could eat you up.
Or if not, the insurance, every time they audit you each year, they ask. Like, you got to have it separate.
Is it what, separate payrolls or what?
Well, you got to tell them how much payroll you did for landscape and how much you pay for lawn care.
Yeah.
I think landscape's like 10 or 11% or something. Contractors for 33.
That's just a GC, or is that actually
the guys working for a contract company? They put them at 33%. I tried to call it like carpentry one time. Once they found out I was paying plumbers, electricians, and people like that, they said, "No, you ain't gonna get by. You're gonna pay 33% on them too." They had like 2 superintendents that did some work also.
Yeah. But you're not required to pay it unless they don't have it.
Yeah, unless they don't have it, right? But it's still at 33% rate if you hire somebody else that's not covered.
Not covered. Yeah. That's why you got to get that. That's before they even step on the job site. You got to get that certificate of insurance.
Yeah, sometimes I need 1 or 2 for a few days. I have to slip a little cash or something, but that's not right either. Because what if they did get hurt?
Yeah. And any contractor who sublets any part of a contract must first obtain documentation that the subcontractor is in compliance with the North Carolina Workers' Compensation Act. So if they give you that certificate of insurance, pick up the phone and call them and see that it's not lapsed, because I've seen guys with a little bit of whiteout and stuff like that. You can do a lot with Adobe PDFs on your computer. So call the insurance company, make sure they have it. Unemployment insurance programs provide unemployment benefits to eligible workers who become unemployed through no fault to their own and meet other eligibility requirements. Most of the time, we're not firing them. They just don't show up and they never return. Social Security insurance. Social Security Administration is a federal agency responsible for paying retirement, disability, and survivors benefits to workers and their families. Also responsible for administering the Supplemental Security Income Program. And so, unfortunately, a lot of our hired help, Social Security is their only means of retirement. They're not going to participate in a 401k. They're not going to participate in an IRA. They're just going to work and wait for Social Security, and that's not a good thing. Coverage for subs. When hiring subs, you should verify their insurance coverage is there to make sure it's adequate enough to cover any liability arising from their work. Does the subcontractor carry the appropriate insurance? And you might have to go back and check and see if you're hiring a framer that they are carrying the framer's rate. Is the coverage adequate for the type of work being performed? And is their insurance current? If it is required, it is prudent to write the requirements into the contract. Now, that brings up another whole topic. Are you guys actually writing contracts for your subcontractors? Or is it more or less, hey, give me a price, or this is what I'm paying. Do you want to do the type of work? Handshake.
Yeah, they've been with us a while. You just let them come on.
You what now?
When they've been with you a while, you just kind of let them look at that particular one and tell you what it costs.
Yeah, once you earn that trust, you earn that trust. What if you had to go out and hire somebody new tomorrow? Are you going to write a contract?
They just send you an email their proposal, which serves as the contract.
But do you have like specific things like, hey, you got to have this workers' comp, you've got to have this GL? Do you have like a simple little contract that you've wrote up and say, hey, for this price that you're giving me, you've got to have this, this, and that, and all that? Or is it pretty much just take the estimate and go with it?
Well, the girl at the office, she won't give them a check until they got that certificate. It's understood they got to have that.
Yeah. And probably before they even show up on the job site, because a lot of them will go buy it the day they know they're going to get that paycheck.
Right.
Bonds. James Bond. Surety bond. That is a risk transfer mechanism between a surety bonding company, the contractor, and the project owner. Now, that is what you can actually purchase to get your license limitation increased. It is a bond that we have to have for landscape contractors, which is only for $10,000, which costs $300 for 3 years. So very, very cheap surety bond for landscape contractors. The GC surety bond is very expensive. For that even limited license, like I said, I think it was $13,000 a year or $14,000 per year that you'd have to pay the bonding company to write the bond saying that you can have the limited license. The agreement binds the contractor to comply with the terms and conditions of a contract. And if the contractor cannot perform the contract, the surety bonding company assumes the contractor's responsibility and ensures that the project is completed. So, anybody ever know anybody that's had a bond acted upon them? Like the bond got activated? Nobody. The bond companies will come and take everything. They are some greedy people. We were doing a project at UNCG, the student union, and a very large project. They actually had 3 different prime contractors. They had the building contractor, the HVAC contractor was also a prime, and the electrical contractor was a prime. The electrical contractor went broke midway through the project, so their bond was enacted, and they hired Star Electric Company to come in and finish the building, who was doing it with time and materials. They were there for like 4 months just raking it in with the bond company. And so the bond company will come after you and get their money back. It's almost feels like the mafia, to be honest with you. But bond language, the total dollar amount required for the bond amount is generally set as a percentage of the estimated cost. The length of the bond lengths are typically required by a fixed rate of time following a project milestone, and then requirements for notice of defect or lack of maintenance. This is a period for completion of corrections and is generally outlines after the notice of defect. Bond enforcement. If the contractor does not successfully complete all the required work or violates any requirement of the bond, enforcement measures are outlined to ensure project completion and proper maintenance. So it's all about protecting the owners or the homeowners in a situation like that. Types of bonds. Bid bond guarantees that the contractor, if awarded the job, will do work at the submitted bid price. They enter into a contract with the owner and furnish the required performance and payment bonds. Now, as a subcontractor, and probably Mr. Honeycutt, have you ever had to submit a bid bond for a large commercial project?
No.
You haven't? We've bid on jobs where you actually have to have a bid bond, or what else can you take in lieu of a copy of your bid bond? What can you take to the bid presentations? You can actually take a certified check from your bank. They're going to tell you how much the bid bond needs to be. So when you give your price to some of these commercial builders on some of the bigger jobs, you're taking a 10% check. So if your cost of the job, your estimate is $100,000, you're taking a certified check for $10,000. Why do they have to do that? Why are larger commercial GCs requiring that?
They've been burnt.
They've been burnt. They've been burnt. They get these guys because they always take the cheaper bid, right? And these guys get the job and they're like, holy cow, I think I've bid off more than I can chew. I'm just not going to do the job. Well, what happens to that certified check when they say I'm not going to do it?
It's cash.
It's cashed. And what do they do with the money?
Take other bids.
They apply it to the next higher bid. So let's say somebody bid on it and it was $105,000. They've got $10,000 from that first guy that they can take and apply and go ahead and hire the next person. So that's crazy. We're estimating work and trying to get new jobs, and we're taking checks to give to the builders. Now, they don't catch. If you don't get the job, they give you the check right back. It's only held if you are the bid winner. Performance bond guarantees that the contractor will complete a contract when it's time frame and conditions. Got to complete it. Got to do your job. The maintenance bond guarantees that for a stated period, typically for 1 year, no defective workmanship or material will appear in the completed project. Like a warranty period. Completion bond provides assurance to the financial backers of a construction project that it will be completed on time. Now, what usually happens if you have a set date to finish a project? And even if we have nasty weather, even if we have other situations or whatever, let's say a job is due September 30th, no questions asked. If they enact this bond or whatever, what else can happen? What can they charge the builder?
They can penalize you.
They can penalize you. They start taking money from you if the project is not finished on time. And they don't care about weather. They don't care about your employees didn't show up. They need to get their job finished, and that's why you'll have a completion bond most of the time. Fidelity bond covers business owners for the loss due to dishonesty acts by their employees. A lien bond guarantees that liens cannot be placed against the owner's property by contractors for payment of services. Anybody do lien waivers when you write a check? Nope. Subcontractors bond protects the general contractor in the event that the subcontractor does not fully perform the contract and or pay for labor and materials. A lot of that happens. A lot of these guys bring their own stuff. Maybe the electrical contractor ain't paid the electrical supply house for the wiring going in your house. Bank letter of credit. It's not a bond, but is a cash guarantee to the owner that can be converted to a payment to the owner by a bank or lending institution. So it gets a lot different in the commercial world than it does residential world. One of my good friends does a lot of recruiting at the college with our construction students. And his name's Eric, too. but he works for one of the larger builders here. He's an attorney. They have an attorney full-time on staff, and all he does is write the subcontractors' contracts for each job. So you're doing some major, major stuff when you have your own in-house attorney. But qualifying for one of these bonds, good references, the ability to meet current and future obligations, experience matching the contract requirements, the necessary equipment to complete the work, financial stability, good credit, an established bank relationship, and a line of credit. Bond claims. The filing process, construction law, and contractual relationships govern the bond claims process. The government statutes outline the filing process for statutory bonds. If there are project changes, the security company will not cover the changes to the original contract unless specifically outlined in the bond agreement. And then requests for additional coverage must be made and the bonding company notified. Payment in the event of default. In the event of contractor default, the surety has several options. Provide additional financing for the contractor to finish the project, arrange for a new contractor to hire subcontractors, or pay out the amount of the bond. And I'm sure that last one is going to be their last resort. They're going to want to negotiate with you. Laws governing the bonding of federal construction projects. The Miller Act requires performance and payment bonds on all federal construction projects greater than $100,000. A performance bond is required in an amount that the contracting officer regards as adequate, usually 100% of your contract price. Whatever you're giving them, you're going to have that performance bond in place, 100% covering it. A separate payment bond is required for the protection of the suppliers of labor and materials. And the Construction Industry Payment Protection Act of 1999 makes several amendments to the Miller Act of 1935. Do y'all know how often, like, what is the maximum days we can go without paying a subcontractor? Like, how many days do we have to pay them? What's in that little North Carolina, the business law? Did anybody have to take the business law exam recently or anything?
Isn't it 90 days?
No, it's like 7 days.
Oh, really?
It's like real short. We're supposed to pay our subcontractors within like a week. Does that happen? I mean,
I got builders that pay me 60 days.
Yes.
60 days. If I want their work, they do a lot of work. And if I want to do it, that's their agreement they make with all their subcontractors. We'll pay you 60 days.
I was about to say, how's that work? Because you damn texted somebody wanting to check that day.
Yeah, only you, because I'm scared.
Oh, okay.
Oh, you just pay that fast. I don't ask you to pay that fast.
Yeah, but when I damn ask for something to get done, it gets done.
You have a hard time getting your money from James, Tony.
Nah, he's a good one. He pays his bills, but I just don't understand it. That just tells me a guy pays 60 days. Basically, they're hurting for cash flow.
Yeah.
Let's say it hurt for cash flow. What they're doing is they're using your money to build their house, and they're keeping their money in their pocket. You look at like Marcel Gano. People say he's stupid. That's a smart motherfucker. He's using somebody else's money to make him money. That's a genius.
Well, they're getting their draws, and they're letting it sit in the bank, and they're drawing interest on it for 60 days, sometimes 90 days. We've gone 90 days. It's just the way it is. I think the longest we ever went with Creative Structures, it was over a year, but they came to us. They had an emergency situation. They're like, you've got to go and fix this job. And we went. It was in Alabama. We're like, all right, we're going to do it, because we were doing like 2 in South Carolina, so we kind of fit it in. And we went down there, and it took them a full year to pay it. It was a repair job. We had to go and fix somebody else's mess. But like you said, they gave us a ton of work. And, usually it was like, 60 to 90 days clockwork. You file the paperwork by the 15th of this month for them to write a check on the 30th of the following month. I mean, it was unreal. But like I said, within 60 days you got paid. And that's the way it's going to be. And if you've got to go that long, if you can't go that long, you don't need to be working for commercial builders, do you, Tony? Because that's just the way it is. But the benefits of it is, do you make more money on your commercial guys?
Yeah, a lot more.
Yeah. And it's just part of that side of the house. You've got to be willing to do it. And most guys getting started or whatever, they don't want to, they can't do it. That's where you got to almost have that line of credit if you're going to do it. But North Carolina State Public Construction Projects, state public projects meeting the following criteria require the contractor to obtain a performance and payment bond. The total amount of the contracts awarded exceeds $300,000. The contract exceeds $50,000 on the project, and then the state departments, state agencies, and the University of North Carolina and its constituent institutions require performance and payment bond in the total amount of construction. So basically, like the federal too, they're wanting you to have 100% performance bond on the project. So kind of wrapping up the risk management side, we talked about risk management benefits, insurance, property insurance, liability, the BOPs, automobile insurance, burglary, theft, key man, coverage gaps, overlaps, employment-related issues or insurance coverage for the subs, what is a bond language, types of bonds, qualifying for them, the claims process in both federal and state projects. For more landscape business expert advice, check out golmn.com/blog. And once again, a massive shout out to LMN Software for sponsoring this podcast and making it all happen. LMN is the most comprehensive landscape business management software in the industry. From budgeting, estimating, customer relationship management, time tracking, and so much more, it's the true do-it-all tool for your landscape business and provides a platform to scale your company to the next level. And the best part about LMN is that they have a free version which you can use today if you choose to. Just visit golmn.com/free to learn more and start taking advantage of the software that's helped me grow my business into a successful, sustainable, and profitable company. That's golmn.com/free. And thanks again, everyone, and I'll see you in the next lecture. And that wraps up this episode of the Podscape. Thank you so much for joining us here, guys. I love each and every one of you. Life lessons and landscape lectures brought to you by the Turf Teacher and LMN Software. We'll see you in the next episode. Turf Teacher out.